And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. As always, we've got Cody, we've got Tim, we've got Mark, we got the regulars here, today on a Thursday, 4/16/2020. Markets are kind of having a hesitation day. There's not a lot going on here. We had the unemployment claims come out. We're going to break down all of the news and the price action and whatnot. But first, pleasantries. Mark, how you doing?
Yeah, screw you. Let's get to work.
All right, get down to business. I guess I'll just have to go to Cody. Cody, you're my dude for good mornings. How's the weather? How you doing? How you doing out there in Hawaii, kiddo?
Things are going fantastic. I got the fussy little one in my arm right now. He's calming down.
And he's like, screw you, Dad. Let's get to work.
Right. He doesn't want to work. I just try to lay him down with his toys, and he whined, and he wanted to be sitting here. I have a cute little video where I'm holding him, and he just keeps staring off to the left. So I videoed it. I'm like, what are you staring at? And I got toss up. He just staring at the colors on the screen. He's going to learn to trade. Maybe before he walks, he'll learn to trade.
Sitting on that lap, like I've said, is going to be a great addition to his life. There's no question about it. Sitting there watching you look at charts and trade and get the financial literacy there. Kids will show interest until they don't. I think it comes in waves, Cody. When they're really little, they think it's really cool because they see the patterns in the pictures. Until they're a little bit older, when they need the money, they end up having this middle window where they don't give one care at all. My kids are kind of right there right now. But when they get 18 and they need the money, yeah. I mean, they definitely come back.
They're interested again.
100%. S&P 500's got an interesting technical pattern developing here. And I know technicals, it's one area of the market, and we end up focusing on that quite a bit when we're trading the markets in most market conditions. News has been driving this market, though, in my estimation, Mark. From a charting perspective, relative to a fundamental perspective, how much are you putting your emphasis on charting right now?
From what time frame? From swing trading, from short-term trading, quite a bit, as you probably should. That's probably good advice from now to the end of time. Trust the chart on short-term trades, day trades 100%. One of the problems you've had this week, though, is every time you've got a little technical signal on swing trading, right? The next day you've got this boom sell-off because the news this week has been terrible. Just let me. From an economic, and this is one of the bears' arguments, that, all right, bulls, you have this one day everything's going to be great argument. That's cute. How is the market going to sustain itself in the face of constant terrible economic data? This week you've had the Philly Fed survey. Not just bad data, like record low, lowest in 40 years. The Empire State Survey data. Retail sales, housing starts, industrial production, just one after another. Housing starts collapsed by the most in 36 years today. Philly Fed collapsed by the most to a 40-year low. 22 million jobless claims in 1 month, erasing all jobs created since the Great Recession. Now, some of those will come back as we reopen. But that's what the bulls are saying, hey, none of this matters. But in the face of a constant bat to the face, economic data point, man, that's a lot of resolve you got to have if you're a bull, because you really have to suspend what you are seeing today and saying one day, 2021, 2022, everything's going to be back to normal. That's a lot of headwind right there that you have to fight through if you're a bull.
Yeah. And I do want to get, some analysis on some of those individual points. I want to break those down. First off, if you're joining our show here, welcome as always. It's my job to remind you, we like thumbs up. We like shares. We like you guys promoting us because that's the best thing anybody can ever do. If you're a veteran of our community, hashtag Team Tackle, like you always know, right there in the chat. And I do want to break a couple of those data points down. Now, give me XHB if you can here, Cody. Bank earnings this week, Mark, have been not good. That's saying it lightly. Part of the data here is not just the economics, it's also the earnings coming out of some of these financial institutions. The warnings out of the JP Morgans, the Bank of Americas, the Wells Fargos this week have also been very concerning. Now, home builders, they had this data like you just mentioned. This is a real issue in my estimation. Month over month, let's see if I make sure I get this correct. Month over month, home housing starts were down 22%. The biggest in like 10 years, I believe, something like that. How concerned are you about this sector?
there's a scene from 2012. Like, listen, a good disaster movie while this is all going on. I like disaster movies anyways. 2012, I thought, I mean, not a great cinematic masterpiece, but there's a scene where the plane's about to go down into the ocean and the Russian oligarch comes up and he says that, and he just says, not good. That's how I feel about a lot of these sectors that are directly in the line of fire: airlines, housing, restaurants, hotels, even companies that aren't on the radar today that make high-end products. When you look at the trends, when you look at the consumer spending moving forward, it's not good. Like, and it's hard to see this massive situation that just makes it better, with consumer spending down, with perhaps most importantly, lines of credit to consumers. Banks aren't going to lend like they were for a long time. Get used to that. If you're going to go try to get a loan, you better have better credit. You better have more money to put down. JP Morgan has came out and already stated that, lifting their requirements. Get used to that. And the worse the recession gets, that bank earnings data is very alarming.
Yep.
Very, very alarming.
Yeah.
And
You know,
that trickles down to anything that requires a loan. Anything that it trickles down there.
100%. I mean, the lending market has to change, because in the face of risk, banks have to assess risk differently, don't they? I mean, you have 22% unemployment, you have recessionary concerns, you already have people not paying basically their leases, their mortgages, things like this. I mean, if you were Jamie Dimon and JP Morgan, you would raise the lending requirements as well. They're all going to start doing this, Mark. And it's not just the commercial side of it or the residential side of it. It's also the high end, really big project side of it as well. Give me a look at Morgan Stanley here, Cody, MS. Their earnings were down 32%. Now, Morgan Stanley is not lending money to consumers, Mark. This is a high net worth asset management type firm that does big projects and things like that. This is more of the high end. Morgan Stanley had a really, really bad earnings report in what I read. Now, they did pick up 30% boost in profit to their trading books, by the way. It goes to show you, as always, Wall Street makes money when the markets go down,
No, and heading into the week, I had a simple hypothesis. I mean, it seems like most of our theories these days are very simple with the data we have to work with, that trading revenue on banks and investing firms was going to be good. And we've seen that generally. And so that's good. It's alarming though. I mean, the bells go off, and the thing is that the drawdowns they're going to have to take for billions and billions of dollars in loans that they already are just know and expect that they're going to have defaults on. Mm-hmm. And it was really alarming on banks' profitability. So unless you have the Fed, because once again, they love helping everyone, come in and say, hey, we're going to take on all of this bad stuff, which of course is possible, right? But there were some very concerning things in banks' earnings, in financial institutions' earnings. Trading revenue was good. They're going to get a lot of free money from Fed fees, but those are already running out. Like small business loans today, that $350 billion, and it's gone.
And it's gone.
It only took a few weeks to spend that $350 billion for small businesses, because the extent of the economic damage right now is massive. It is like, it just is insane. And so, I mean, that 350 is gone. So supposedly Congress is working on another couple $100 billion. Of course, Dems and Republicans. And I want to see Chuck Schumer and Mitch McConnell up there in hazmat suits. I want their lazy asses on both sides to get to work, and if they have, listen, meat packers, truckers, Amazon warehouse people, individual delivering you food, they're working, get your lazy asses to work, get to work to help small businesses. Small businesses make up 70% of the employment in this country. Small businesses represent 99% of overall businesses in this economy. If you do not save small businesses, screw Boeing, screw airlines, screw banks who spent a decade spending their money buying back their stock, giving out bonuses, financial engineering. Let them go bankrupt. Somebody will restart Delta. Someone will restart. But those small businesses, You cannot allow them to fail on a mass scale, or I don't know what kind of economy you have to come back to.
I just see the meme in my head of that just saying, preach, preach.
Well, first of all, definitely preach, and I'll knock on wood for that, because I agree with you 100%. Asking the Senate to go back to work, though, when we have a stay-at-home order, Mark, are they really essential workers? I mean, we have that whole non-essential worker thing. Maybe the senators and congressmen are non-essential workers. We don't need them to show up right now.
Well, that's a libertarian point, but yes, they
Yeah.
are pretty much. And I think they need to be spending more time in their own communities anyways. They shouldn't be spending 9 months in Congress sitting around talking to each other and talking federal stuff. No, they need to actually be in their communities and get to know the people that they actually represent. We have video conferencing. It shouldn't take coronavirus for a senator or a congressman or congresswoman to be in their community, working from home, video chatting, video voting on certain things.
You know, one thing that, and you actually, interesting point here, Cody, but I got to tell you, I'm happy with the people in my community running the show right now. One thing this whole situation has reminded.
Thumbs up to Utah governor. We love our governor right now.
And that's the thing, is that there are good politicians and there are bad politicians. And right now you're really seeing who's actually out for the public interest and the public good and who's out for their own political gain.
Well, and it's a reminder, I think, to everybody that so much of government is actually local government. Your city,
Yes.
your county, your whatever it might be, your state. I mean, so much of government actually is local government. And thumbs up to all of those people out there in public service.
Just always talking the Fed, but the news really should talk more about local communities and local things and municipalities and what happens there. That affects your life multiple folds of what the federal government does.
Hey, listen, all I know is, and I love our governor to death, and he canceled schools for the rest of the year. Just know that I just held a class in the last couple of days on teaching my kids how to play poker. That was an advanced class that I taught. I taught them how to find great 80s videos to dance to on YouTube. We held a whole class on that. So the curriculum's going to be a little off in the Justice household from what you might want me to teach in the coming weeks. But, you know, that class is in session. Classes in session.
Dude, stimulate both the left and right side of the brain. Traditional education too much focuses on math, data, and science, and not enough creativity as it is, Mark. So teach them how to dance, teach them how to play poker. I love that. Add a little bit of math in there at some point.
Or you can teach fractions with poker. You got 5 chips. If you have 3, what fraction is that? Like you can, listen.
And do you have enough to cover a check raise, or are you going to have to be forced all in?
Like,
do they know what pot committed is yet?
No, kind of like you listen. That's how I'm going to teach my kids math.
That's too funny. Give me the S&P back on the market here for a minute. You know, one thing I do want to talk about, and give me an intraday chart if you will. Mark, you and I were talking yesterday, and you were saying, okay, when that unemployment data comes out, expect the market to bounce a little bit because for weeks and weeks and weeks in a row, in the face of terrible economics on the unemployment data, we saw the market rallying. Now, and Cody, it looks like, are we struggling there?
There it is.
Yeah, give me a 5-minute chart on this. Now, here's an interesting new trend, Mark. Not a trend yet. This little rally, this little bump that happened when the unemployment data came out, it couldn't hold. And
they tried, right? They're like, hey, this has been working 3 weeks in a row. Mm-hmm. Let's do it again. And I just really think, Tim, that the face of the economic data this week, like, I mean, you just literally retail sales, industrial, everything was just like, it just is this big reality check. It is just this big reality check that this is a really crappy environment, you know, but I look at that chart and you look at that broad support level. I mean, if you're looking for a breakdown trade, because once again, I mean, you know, this combination, I mean, one day bears might be right. One day bulls might be right. But in the here and now, technical analysis on short-term timeframes, we've seen this support level now over 2 days be tested. And so when a support level has extra tests, like multiple tests over multiple little time periods, it gathers more significance. And so when you have a break of a support level like that, it can have, I mean, it means more than your average support break. And you've had what, 1, 2, 3, 4, 5, 6, 7 over different hours, 8, 9, almost different tests of that support level. I mean, you look at the precision in which it's just came down in the last 15 minutes. Like it almost came down to the penny of the pivot low from last night. Um, bulls have been doing very well on technical analysis the last, 3 weeks now.
Mm-hmm.
Like, if that shifts and those technical support bounces, those ranges that develop on the support side hold, if they stop to hold, you could see a technical shift where bears gain more control from a technical. Right now, bulls keep winning. I mean, you look at the precision just today. I mean, look at how it came down. If you don't believe in technical analysis, then basically you're saying that pivot low 15 minutes ago was just a coincidence that it stopped at the pivot low from the overnight futures actions. That's not the case. When that shifts and bears gain control, well, who knows where that stops.
Got a day and a half in the market here this week, Mark. Do you think the bears are going to get a chance to test a breakdown before the end of the week?
No, I'll take that one.
Support. I mean, if you believe in anything, you got to believe in support and resistance, right? Support is there.
I do. So if we back this up a little bit more. Go to an hour start. I think that even if we break this, we have another one really quickly afterwards. I don't think we're going to get a full on drop. We got to break that 200 hourly, because yes, I can see the chart.
Stay there. Hold on. You can't bring up an ugly chart, try to make a point, then not let me at least look at it. That's a head and shoulders reversal right there. That is showing me momentum and clear air to the downside. 2750 is gone. You're probably a pretty quick 50 points down to 2700, right?
You're saying
probably
here?
Yeah.
No, I can see that zone. It's probably more of a zone, but when you were saying, the bears get a chance to play, I mean, if you're counting a break here, drop, 1 day red candle as a bears getting a chance to play, fine. But I don't consider that bears getting a chance to play. I consider, what you had asked is before the end of the week, do we get a break and a move? I don't, because most Fridays, typically you're seeing wrapping up, you're seeing closing of positions. Anyone that is short will be covering. Anyone that's long might be covering as well, which might bring us down. I think we'll end up with a very choppy sideways market tomorrow. And that's why my answer to your question was no.
Chucky?
I think the best setup for the bears moving forward is coming up in 10 days, 8 days from now. When you have that rising 20, you have all of the 200 and big moving averages moving up, and you get this clear air situation to the downside on daily charts, on hourly charts.
Mm-hmm.
And, you break some support levels, you get below those. My studies indicate algos, that's a big triggering signal for algos. So, that really good bear setups, I mean, you could trade within this broader range back and forth for several days. But the really good setup is coming up, 7, 8, 9 trading sessions from now.
Yeah, it needs some time to cook in those regards. I mean, that's what I think why a lot of bears were like, okay, the bulls are in control in the short term. And by the way, they're still in control the short term. They have the short term trend right now. They have a higher pivot high, higher pivot low, and they also have the moving averages kind of pointing in their favor in some of those regards. I think that compression, when it does happen though, Mark, is going to be very concerning for any technicians. And by the way, one of the narratives in Wall Street right now is that there's all this hope about future. I'll tell you what traders do instantly. And there's a reason why Morgan Stanley booked a 30% increase in profit. Wall Street guys are going to trade whatever happens. The algorithms are going to run. If the markets break down, they will trade it back to the downside. If the markets break up, they're going to continue to trade it to the upside, right? So we got to wait and see how that all plays itself out. Little doji candle. This might be the first little inside doji candle in a very long time on the S&P 500. Kind of a welcome, kind of just chill out day, right?
So my thought on that is, as I look, at this candle here, right? Red candle. That when we were coming up to the same zone, we're still kind of hanging out in. Without even going to the intraday, I could see from that tail wick that it has that any selling was bought up immediately.
Yep.
So how is that going to possibly happen again? If we get selling down, would it be bought up again and we end up basing here?
Mm-hmm.
I think in order for us to really say like, hey, there's some bearish move, it has to first break that 2,700. If it does, the quick drop 2,600.
Yep. I love it. I love it. By the way, if you're watching our show right now, one thing I love doing is kind of, talking about our community. You guys are as much a part of it as each individual one of you, as any one of us as well. Let us know where you're watching the show from. I just saw my buddy Jason Van Beesen, who I know is here in Utah, local, and it's great to see your name, Jason. Just pop in the location where you are under, quarantine or sitting there watching your show from, and let's see where our community is at across the country and across the world. Let's talk more about some of these charts. Let's flash fire through a couple other ones, guys. Move on from the S&P for a minute. Move on to crude oil if you can. Mark, there's this rumor that Trump wants to pay producers of oil to not produce oil. Okay.
Not going to happen.
Would that help the U.S. production side? Of course it would. Stop putting oil into the market, right? There's still the supply-demand conversation. Cody doesn't think it'll happen. I mean, in the face of historic closures and maybe bankruptcy and default in the oil industry, these are high-paying jobs. Do you think that would actually get through, number one? And do you think it would be a solution to the oil price?
Well, I mean, they would need to give Nancy and Chuck. And once again, when I say Nancy and Chuck sarcastically, I say Mitch and Trump. They're all a bunch of politicians working on this right now.
I'm at the leaders of the parties is all you're talking about.
That's all I'm talking about. I could see that. Because I could see them giving them concessions and working out a deal. That's the only way it would happen, right? If we're going to give, it's a long shot. It's a long shot. The easiest thing Trump can do potentially is institute tariffs. But the supply demand issue, this is something that, we've been talking about for weeks and weeks and weeks.
Mm-hmm.
The storage capacity issue is coming full blown. Pretty soon, your backyard is about the only place that oil producers are going to have to put oil, because all of the other capacity is going to be filled up. So, and it's going to force production to stop. Now, does Trump want to pay these producers? Does Congress want to pay these producers to not pump, to keep jobs? Right now, it is, you can't save everybody. States and governments, small businesses, airlines, Boeing, oil producers. Who wins that? Who has the best political poll?
Mm-hmm.
These are, because you just can't save everybody. The money printer goes brr, and that's cute, but you can't save everybody.
Mm-hmm.
And so, who wins that political fight? Oil and gas. It's a harder fight to win, right?
Well, it's a large scale of the idea that people who have good budgets, people who have good, responsibility in what they're doing, you take it to a small scale. If you continue to give, money to your, lame uncle who just needs more money, it's not until he actually changes his action that it's going to turn around. So it's just a larger scale of that. You can't save everyone, because even if you throw money at every single company in the United States, only the ones that actually have good fiscal responsibility in their businesses are the ones that are going to take the relief, take the packages, and use it.
Mm-hmm.
It's the same concept on a larger scale.
No, I have a very bullish thesis on oil, but as we've been talking about for a while now, downward pressure is not only possible, it's likely. And so on the pro members, and we'll update this weekend when I do my weekend classes for pro members, come on board. Listen, if you got nothing to do this weekend, send me an email, say, Mark, set me up for a trial, because I'll do anywhere between 5 and 10 hours of live content on the weekend since the coronavirus situation. And one of the things is oil. And I have this long thesis on oil, very bullish long-term, if you have a real long-term investing horizon, but know that there's this short-term downward pressure that's possible. And so it's one of those delicate balancing acts. You don't want to go all in with your chips. You don't want to be pot committed. My kids would teach you after yesterday's lesson. But you want to dabble a little bit with those high premiums. And so there's this delicate balancing act on how to play it if you have this long thesis. But man, there's just more oil is being pumped than we are consuming right now. And that just is the good old fashioned equation for short-term lower prices.
I got to know now. Did you teach him Hold'em?
What?
Hold'em,
Texas
right?
Hold'em, of course.
Yeah, Texas Hold'em. Yeah.
Listen, you got to
You got to start with Hold'em before you can go to 5-card stud or something.
Omaha, eventually I'll get them to learn how to play Omaha high-low. But you know, got to teach them what to hold them first, the basic mechanics, you know.
For sure. I like it. Oil price obviously under pressure here in the short term. You know, there's a couple things. Cody, I want you to go to the trade tab here on Thinkorswim and open up the option chain. And let's talk a little bit about this contango and these different months. I believe just one expiration out. See where it says up at the top where it says active only, Cody, and then single. Change it from active only and give me all of them. Yep. Now you'll notice this, Mark. Is that the May contract? 33 days out. No, it's the June contract. It expires in May, 33 days out. Oil price for that contract is 25 bucks a barrel.
Yeah.
Okay. Oil price for the July contract. What is that, Cody? I can't see it. 28.81.
28.81.
That 1 month can take what? That's crazy, Mark. $5 difference between just that expiration.
Because everybody knows that's in the oil, that even with this demand, the short-term supply and demand issue will have to be forced. Storage will reach capacity. Oil companies are going to have to cut off the pipes. It's just that simple.
Mm-hmm.
When there's no place left to store, when the strategic reserves and all the capacity is filled, eventually that supply demand will balance. And so in the short term, there's this massive shock, and a massive shock, but it is expected to resolve itself. Plus, there is a natural expectation, and this is correct, to what level we don't know, that as society starts to reopen, yes, is oil demand going to be still really, really down from where it was in January or last December? Yes, of course it is. But it's going to be better than it is today. As people get back to work on some level, they're driving, they're flying, industrial production. And so the oil market knows that, yes, in the future, there's going to be more demand. The supply is going to be cut, creating this contango situation. And then it's another reason, like on USO, who rolls front month futures out, you need to have this cautious approach, nibble of this larger percentage portfolio that you're willing to own in oil, because it's going to be better in the future.
Mm-hmm.
But short-term pain is really, really, really possible.
Coming to an ETF near you. Give me a daily chart on USO here, Cody. First, OIH. I don't know if you saw this news the other day, Mark. They did a 20-to-1 reverse split on OIH. OIH first here, Cody, then back on USO. The reason I bring it up, USO at $4 contract. They've got to inverse split this, right? You know, this OIH was the oil holders. These are oil companies, not oil prices, obviously. And they reverse split it because how can you trade an ETF down at $3-4, right? So do you think USO is going to have a reverse split? And do you think it'll be radical?
It seems to be the trend. They did it also on, what was it? The producers ETF a little bit ago.
Mm-hmm.
I hate it when they do this because it takes away a lot of my strategies. Because like to now go buy 100 shares or sell a naked put on OIH, I have to do whatever.
Well, you hate it if you're bullish. If you're bearish, you love it because then you get.
If you're bearish, but go to the option chain, like go to the trade tab. So when this happens, you will see that the weekly options for those old contracts are still available. You can still trade them. And there are new contracts as well. So if I go to May 1st, I see that there's the new weeklies based on the new price. But if I go down to the next tab, I see that there's still the 20-to-1 old ones.
The $2 ones and the $3 ones.
You know, and so like there's still ability to manage some options. Now, it's not ideal when this occurs, but you still do have option ability to manage those old positions. The problem is the volume goes down. I mean, you look at the bid-ask spreads on these old ones now, and all of a sudden you have these really massive bid-ask spreads. So it's not ideal when it happens, but you know, you still can do some functional manageability when it does happen.
Yeah, I expect they will do it if USO does not go up at some point in the next couple of months. I mean, if USO is back up at 10, you know, if oil went back up to, you know, $35 a barrel, whatever it is, it's a different equation. But if USO's down at $3 and they've got to issue strike prices. I mean, this is the trend that they're in. It would be an interesting dynamic.
I think it'll happen, Tim. Just because of the nature, like you mentioned before, the fact that these contracts have to be rolled down and rolled out as based on the futures contracts. Yeah, as this thing is constantly being rolled, it'll have a slight downtrend versus the futures. So yeah, I think every once in a while they're going to have to reverse split it. I think it'll happen.
Listen, and here, Tim, you and I need to quit smoking.
Correct.
Smokers are 14 times more likely to contract coronavirus compared to those who do not. A Turkish anti-addiction group. And there's another study that says that smokers are more likely to die than the elderly from coronavirus.
It's a respiratory virus that floods your alveoli and inflates them to where they can't perfuse oxygen into the blood, which is also what happens when you smoke. So if you're already smoking, you've already damaged your alveoli, and then you get a virus that damages them even more, adds inflammation, adds some fluid to the lungs, then yeah, it makes sense. Stop smoking.
Yeah.
There's my harsh.
Damn it to hell! You know, I'm so used to scaring the hell out of other people on this show with coronavirus talk, and now I just did it to myself.
Yeah.
Literally, if you think about your lungs, the little air pockets that you get, it's like a bunch of.
No, we ain't doing this right now.
Dude, I'm pulling a Noah. I don't want to hear it. Nah.
Oh, I could absolutely not even necessarily like a look at a black lung thing, but if you imagine your lungs as grapes, imagine half those grapes are raisins.
Hey Tim, how you doing today?
Cody. Now pleasantries, right? Listen, I mean, there's no doubt about it. In fact, Diane, I already know that anybody who does smoke already knows that they need to quit that habit. There's no question about it. So thank you for the public health announcement there, Mark. I appreciate that. Cody, move on to natural gas here. Natural gas inventory showed a really stark build in supply. Little momentum change here, Mark. I mean, difficult chart. I asked Noah about this yesterday, and he's still cautious, but I'm seeing a little bit of an interesting chart behavior in my perspective. Thinking about maybe a little nibble or a dabble into the UNG product. What's your read on that gas?
I'm comfortable. I like the long-term forecast of natural gas. I mean, natural gas as a byproduct of shutting down oil, there's going to be a little bit of bump. Now, they're not all interconnected, but I think there's more insulation. It's just you can't play the rallies. Like the rallies on natural gas, it is more of a bottom feeding. I have a naked put on natural gas on UNG right now. So I'm willing to put my money where my mouth is on this, full disclosure. So I'm going to be building a small natural gas. Now, unlike gold or silver, where I'm willing to have this larger percentage of my portfolio, it's just going to be a little bit percentage, but I'm willing to do that. And I would just want to share with you. Can you see what my notepad says? And this is going to be my quit smoking notepad. So it says, "You cannot die. Who will make fun of Cody?" So I now have motivation. And this is going to be my checklist of how this is my quit smoking checklist, because I can't die.
There you go. I mean,
the world is better off if someone is here to truly make fun of Cody. So, so that's my motivation, Cody. You will save my life.
There we go. I need someone to go toe to toe with.
I like it. I like the natural gas down here, Mark. I was looking at some of the strike prices on UNG. Give me UNG for a second if you can. ETF products are so good for cash flow, in my opinion. Just different ways you can play them. We're down at $12 on UNG. It's been in a precipitous downtrend for a long time. The problem is when you go to the trade tab here, Cody, take a peek at this. 33-day contract or 29-day contract. I mean, the 10 strike, you can still pick up $16, if you're willing. Where are you thinking strike price wise, Mark? 10, 11?
And this thing on natural gas, once again, like I really think, let me go have a cigarette while I do this commentary. No, it's
16% return on investment.
All right. One of the reasons natural gas and oil, I mean, listen, why have they exploded? Why has production exploded so much over the last decade?
Move away from coal, alternative energies, I think.
But one of the reasons has been cheap money, right?
Very interesting.
They have had just infinite cheap money, banks investing just flow into them. Like here, infinite money, infinite money. I think that world has stopped for the next 2-3 years.
Mm-hmm.
Now we'll get back to hubris and irresponsibility soon enough, because that's the cycle, right? That's the cycle. But for the coming years, those, I mean, if you're a lender, I mean, there's a lot of places you can put your money, like oil and gas, man. Maybe if you're Exxon, right? Maybe if you're Chevron, but I think a lot of smaller oil companies, a lot of smaller natural gas companies are going to have a hard time finding the liquidity that they once did. Even if the government pays them in the short term to not produce, long term, those lines of credit, I think, are going to dwindle a little bit. And so I think a natural balancing of supply can happen in many, many, many ways. But like that access to credit, I just don't think is going to be there. Most of the big banks have really generous price levels on natural gas for 2021 right now. And so like building, and once again, it's not like this huge position. It's a few percentage of your overall portfolio, right? But I just think there's a nice little opportunity to start to nibble in natural gas right now, based on long-term trends, based on the slowing momentum. The one thing you've seen on natural gas, and I didn't have my cigarette, I wish I did, but like when you've had, I mean, go back to NG, and this is one of the things that I found most fascinating about natural gas over the last few months, is that when you've had breakdowns, because we got nothing but clear air to the downside, right? There's no support levels. I mean, when you've had breakdowns, like one that occurred in February, that one that occurred in March, from a technical analysis, they haven't been big sell-offs. They've just taken this little bitty, itty bitty leg down. And so the breakdowns have been really benign, really benign. That one at the start of the year was pretty significant, but the following ones, no, not so much. So you've definitely seen slowing momentum. Yeah, so I'm in on building a smaller position in natural gas right now. So
yeah, and those supply demand dynamics, Mark, that's very, very insightful. And I hadn't thought about that. So many of these natural gas producers who are not the big boys, they have had to have financing, as they come out of the market, that could balance that supply demand.
I mean, it's just going to happen. It's just the world we live in. You see this from the bank earnings right now. You see this with bank statements. Easy access to credit is not going to be there anywhere near the levels that it once was. It just isn't, and unless of course the Fed comes in and says, here's $1 trillion.
Maybe the Fed will buy commodities at some point too. I mean, why not? Why not buy oil? Maybe the Fed should buy oil. I saw that in the chat earlier. Somebody made that comment. Maybe natural gas as well. The Fed's got everybody's back these days.
Yeah, every time if the Fed came in and bought oil, that's not the way it works. You come in and buy oil future contracts, Fed, guess what? 2 days later, shorts are going to be like, Fed, you are rookies at this. After your bump, we're going to short that shit back down to the level in which you bought and erase it all. And you're going to be holding dead contract after dead contract and lose a ton of money because you aren't traders, Fed. You don't know how to anything but hit the green button on money printing machine.
So have there been historical examples where, banking systems have tried to manipulate prices, but the private sector ended up beating the crap out of them? Oh, yeah. Yeah. I guess the Bank of England in the 1990s, when we saw the pound crash, they tried to artificially keep the price high. Traders came in. In fact, George Soros made $1 billion in one day on that big pound crash.
If the Fed, can they create short-term bottoms for a day or two or for a short period? Yeah. But it is literally impossible, and impossible if the Fed wanted to drive a market up infinitely, they can't do it. They can create rallies, but eventually shorts come in and say, boom. In order for the Fed to do that, they would have to end up owning like the entire market at some point.
Yeah. Quick peek at gold here, Cody, if you can. And just a little bull flag, nothing there, nothing to see here. There's no updated news in the gold sector. I don't really see anything in that chart. Mark, do you?
No, other than getting more money for naked puts that I'm going to sell tomorrow at the market close show that we do for our pro members. So
I love both flags like that, by the way. You know, if you're looking for an entry point to pull back at some point, you do get a little bit more on the naked put premium.
No,
Yeah.
there's been a couple things that I've hated. Uh, the things I'm very, very happy. Yes, had I known how markets would respond the next couple of weeks, yes, in hindsight, would I blindly did things because you have the benefit of hindsight. The two things I've been unhappy with is how I played precious metals in both gold and silver during the sell-off. I wasn't as aggressive because we knew, I mean, we knew this was our speculation during the big sell-off that occurred when everybody was selling everything, that it was obvious that these were margin calls, that it was obvious it was had nothing to do with the fundamentals, that I wasn't more aggressive acquiring silver, acquiring gold. That is the thing that I am most unhappy about in my own personal trading over the last 2 months. And so like because the fundamentals of gold, they're off the charts. Hasn't changed. When those sell-offs were occurring on the halftime, we're like, fundamentals are still great. This is likely margin call, automated selling, rebalancing of portfolios. And, and obviously we were right during that. I mean, you look at the price action that happened right after there. Look at those two huge, massive candles that occurred after the big sell-off. And so when gold sells off, I get more excited. I get more excited. And if we ever did have a big sell-off again, I'm not going to make the same mistake I did on the precious metal sell-off that I did before. I'll make a new mistake, right? But I won't make that mistake again.
Sure. Quick look at the dollar index. Not much in the Forex market in terms of news. I mean, obviously currency pairs are moving back and forth. You can always day trade them. I'm not seeing much in the fundamentals right now that has changed, in my opinion. And this dollar seems to just kind of be anchoring, into this triangle pattern. Unless you break a pivot one way or the other, Cody, you got no trend there. What's your read, Cody?
No, that's exactly what it is. And for the past week, as every time you've asked me, it's just this thing is wedging, and the lines I had previously, obviously those weren't correct because it's still slowing down. There's still not much volume behind it. But I mean, if you were to call it, it's kind of breaking to the upside of this wedge, but it's got the 20 right there. It's really hard to trade the Forex market right now just because everyone's waiting to see. There's a huge wait and see mentality in the Forex market right now. Mm-hmm. Even intraday, these things are just bouncing around. I mean, the amount of just day trades I've been having to do, it's been difficult because, I mean, yesterday as I was day trading after the market closes, typically when stock markets close is when I'm doing most of my Forex trading, just still able to trade something, but wasn't able to do very much yesterday. Look at all this just sideways bouncing action. It's hard to trade. Yeah, you want trending. You want something that's trending, that's both stocks and futures and Forex. When it's not really trending and it's going sideways, it's not necessarily the commodity or the avenue that you should be trading in. Look for things that have clear trends. If it's a neutral trend and you need to trade it directionally, then you don't have a trade. In the Forex market, other than carry trades, which carry trades have been blown up due to everyone going to zero lately, that the only thing that you can do is delta trade, directionally trade, and it's sideways. Can't do it. Short of small time frames, we'll see. There's a lot of wait and see. I mean, if you want to call this a possible break and maybe this wedge continues, yeah, we got a day. Let's see what it does tomorrow. We'll see.
Yeah. And by the way, today we're going to do some individual stock analysis in a segment. What are we calling this one, Cody? Relationship advice. We never really figured out one final name.
I don't think we ever did. But yeah, relationship advice, marriage counseling. This is the one that Mark always does when we do rapid fire.
Therapy Thursday.
You idiots and your desire for alliteration. It has been designed. Thursday on the halftime show from now to the end of the time. It is Therapeutic Thursday. So this is where you have a relationship with a stock and you.
I like how he makes fun of the alliteration and then gives us a great alliteration.
This is why I can't die.
To make fun of Cody.
So all right, Therapy Thursday, guys. We're going to be looking at stocks that you want a relationship with long term.
No, yeah, and pop those in here. Let me lay this out. No,
and this is not trading. This is long-term therapy. Do you want to be in a relationship with this stock?
Yeah.
Or ETF or commodity? Like, Do you want to be in a relationship?
We'll break it down. We'll break it down. While we get people's answers in there as well, Dr. Phil, F-I-L-L, is a funny name for a spoof on. That is really good.
That's
Jay
really good,
Parrish,
Dr.
9001. Oh, man, that's great. Before we do that, there's a couple of companies in the news I want to talk about while we get these people in here.
Who's going to be Dr. Phil? Because, I mean, we have Father Stoccaducci, we have Max Loss, Dr. Phil. We got to get this going.
I can be Dr. Phil. I can be Dr. Phil. Abbott Labs, Mark, here's an area. There are winners in this market right now. ABT had earnings. They came out and they beat the tar out of them, and they're breaking out into new highs.
Listen, it is going to be really important because, listen, if you are not taking into account the coronavirus and the impact of society, you are literally being just a silly grade school individual who's just blindly betting. What we want to do moving forward is get a sense of what real earnings look like on companies in the midst of this, that no matter what happens, how might they look? Abbott Labs had earnings come out. Numbers look pretty decent. Their sales on different units, because one of the things that we're going to be looking for moving forward on individual companies, like, and Coca-Cola is a prime example. What are individual segments? Because they have lots of different revenue streams, these big companies like Abbott Labs. The revenue streams across the board look pretty decent on Abbott Labs today. I mean, so it wasn't just one area that was doing well. It was a variety of areas doing well. And so we talked about Johnson & Johnson a couple of days on sell-offs, Abbott Labs, because all of their streams looked pretty healthy, which is one of the reasons. So, like, I mean, this is the thing, like a medical device company or a hospital. I mean, you hear about hospitals losing, like laying off people, cutting salaries, and how can you do this in this climate to doctors? Well, it's because some companies' revenue come from streams that aren't there anymore. And so it's not just one segment. Hospitals are busier than ever, and yet they're losing more money than ever because certain revenue streams have been gotten just hammered. Abbott Labs, different revenue streams across the board look pretty healthy. You can put this on a really nice, whatever bullish list it is. Johnson & Johnson, Abbott Labs. Abbott Labs, to be honest, was even better than Johnson & Johnson the other day. I was thoroughly impressed with their earnings report today.
Yeah, no, it was great. Taiwan Semiconductor, they beat, and they also issued inline guidance for 2020. TSM. Second biggest semiconductor company in the world, I believe, Mark, if I read that right. Obviously, this is an area of great interest for you. You track semis, you track all the market. But this area, you know, you're talking about other companies that are going to be watching cues like this from Taiwan Semiconductor. What's your read on this one, Mark? Because I was impressed with this.
It was all right. Like, it was all right. Abbott Labs blew me away. I was really impressed with Johnson. You know, the semiconductor space, I don't trust at elevated levels. It is so, I mean, global growth, like when you look at global growth periods over the last 10 years, semiconductors is a great place to be in when there's global growth. Like 2017, like semiconductors, like you want to be in those areas. I just don't trust semiconductors as a whole. There might be certain areas, gaming, right? Gaming chips, certain areas that can do well in this market. But like as a whole, like, I mean, you look at this, I mean, you look at, you know, the chart, we're at levels that we were basically at, what, 5 months ago? Like, I mean, but you go back to 2017. I mean, go back to 2017, the year of global synchronized growth. Look at that nice, look at the nice, beautiful trend that occurred during that time period. Global synchronized growth in general is really, really, really the semiconductors you want to gravitate. That's not the climate I see moving forward. Like we're going to be in this big, massive fight to keep what we have in growth levels the next couple years. So semiconductors just not as excited at elevated levels. Just not.
No. Yeah. Let's get down to people's picks in here. I've got a bunch of companies we can hit at the end of the show as well, but let's start, Cody. Why don't you just pick some out of the chat, and let's start right up in the game.
I'll start with Coca-Cola. Mark brought that one up, and that was one of the ones that was the first ones in the chat. Thoughts on Coca-Cola earnings next week, long term? Mark, you said you had some thoughts on Coca-Cola. I'd like to hear it.
Listen, I think your relationship with Coca-Cola, you need to tell Coca-Cola that you need to take a little break from dating. that you're interested, you really are in the individual, but you just need some time off to focus on yourself. Because you need to see out of Coca-Cola what those revenue streams are. I mean, we've seen this with millions of gallons of milk being dumped out, just acres of vegetables because the supply chain has been so disrupted. I need to see, before I start dating you again, Coca-Cola, before I get into that really beautiful long-term relationship that you can provide, I need to see how impacted you are by the food supply chain, restaurants closing, schools closing, vending machines not working. People aren't buying as much Coke from McDonald's, right?
Yeah.
Like, I need to see how those revenue streams have been impacted. So I just need to take a little break. Love you, Coca-Cola, but I just need to take a little break to focus on myself.
And you got earnings coming up here in a few days. You might get some of that information from their statements and whatnot. Next, Cody, DAL, is that what we got?
Delta Airlines. Delta Airlines has been getting completely beat up recently, and I will let you take this one because I currently have a short about to trigger on this one.
Here's the thing. I mean, Delta might be going into a relationship with somebody else called the U.S. government here very, very soon when they take all this bailout money, and it might need to be more. The airlines recently just took a big chunk of cash to be able to pay payroll, $25 billion in forgivable notes and things like that. The other money, even a lot of people presume, is going to be forgivable. That's not the problem. In fact, if you think about it, I even read today, United Airlines cut 90% of their May schedule. Okay. Are we going to get air travel back in June, July, August? What will that look like? What will fares be with oil prices at $20 a barrel mark? Airfares, are they going to come down? Are they going to be able to charge what they once wanted? There's a real just litany of questions on the supply side and the demand side for air travel and what's going to happen with these companies. Now, that being said, Delta has been a great airline for a long time, but they're in a very, very precarious fundamental position. I think this one, I would say, let's talk about a vacation in the summer. Maybe come back in a couple months, reassess where the charts are, reassess where the fundamentals are, see how the re-rolling out of economic activity and travel is going to look like. I don't see a reason to jump the gun here, Cody.
No.
I think this is really far too early for any
I'm willing to
play.
take Delta on a cheap coffee date. I'm not willing to take Delta to dinner.
Yeah.
So if I can get
where you go Dutch and they pay half, right?
Yeah. So I'm willing to
exactly.
take Delta on a cheap coffee date with naked puts way down there. I'm happy with that type of date, but yeah, Delta, you gotta, I'm not buying your coffee on that date. So give me a $5 naked put.
If you can get a discount. Next, and we won't get to all of them today, guys. Obviously, this is a little different than rapid fire. So let me kind of handpick some here. Walmart, Mark.
I got questions on revenue streams now at higher levels. Now Walmart hasn't been cheap for a long time, right?
Mm-hmm.
I got some of the same issues with Walmart. Obviously, we know that their grocery sales are off the chart. We saw that in retail sales this week. Retail sales were at these record low plunge, but food consumption, food purchases were really high. If other areas of Walmart stores are seeing huge declines in sales, toys, automotive, housewares, and the food, you're going to get this one-time surge, right? Like, I bought $800 worth of food. Mm-hmm. I got more Chef Boyardee and spaghetti and top ramen than I will know what to do with. But I don't need to make that same purchase again in April, do I? I don't need to make that same purchase again in May. I can go back to normal habits. Mm-hmm. And so if the revenue declines have occurred in other segments of their stores, yes, is it going to be offset by food in the short term? Sure. You know, is Walmart going to be around and be an important part of any situation? Sure, but it's all about the price I'm willing to pay. And where Abbott Labs, I've gotten that information. Walmart, I don't have that information yet, and so I need that information before I date you long term, Walmart.
Yeah. Next, Cody.
You said you're going to pick some.
I will. I like it. ExxonMobil. This is a good one. I'll take this one. If you've been in a relationship with ExxonMobil, like you're pushing the 30-year wedding anniversary type situation, you've probably ridden through this many, many times, ups and downs and back and forth, but they've always been there with the dividend. I believe with low oil prices, Exxon might be one of the big winners out of all this, Mark. You know, as other people who are smaller firms get driven out of the market, Exxon might be able to come in and scoop up and still hold a lot of that market. Now, that being said, I was concerned about Exxon even well before this, because Exxon, the percentage of their profitability has gone down. They have not been as efficient as they were even 20 years ago. But from the oil war here, don't you think Exxon is in a position to come out ahead?
In the long term of it, yes. I mean, this is the thing about Exxon. Exxon is fighting organized cuts because they smell blood in the water too. It's in Exxon's best interest for a lot of these shell companies to go out of business. Just bottom line, ruthless capitalism, right?
Mm-hmm.
So I think Exxon long term is positioned to do well. It's all about the price you're willing to pay. There's an opportunity in Exxon coming up. I'm being a little more careful with Exxon. Like people have asked me all the time, Exxon. Like, I really want to date you, Exxon. I really do. You are on my radar. I'm willing to bump some things out of the way so that I can get in a relationship with you. Just going to be a little cautious in the coming weeks because we can expect lower oil prices.
Yeah.
And so I want to be careful, but then I become interested. Then I become interested because it will be one of the survivors of the oil war. So there's something here. It's patience on this one.
I think so. RH, next one from Paul Liu out there. Paul, always great to see your name. Halftime crew regular here. Marky, RH. I don't know much about the fundamentals of this company, quite frankly.
Yeah.
The Restoration Hardware.
It's let me just get. I pulling
up. I don't know.
I know. I'm pulling up some things. So what you have here is you have an in the line of fire company, where sales are going to be down. That's not a question. They're something that, unlike an Abbott, they're directly in the line of fire. Decreased sales are absolutely a likelihood. And so these are coronavirus plays to the downside. These are coronavirus plays. How you feel about the coronavirus goes a long way on your opinion on these type of companies. I personally think the coronavirus is going to alter consumer spending for a long, long time. I think we're going to be dealing with the virus.
I'm thinking out loud here. Another thought on that, Mark. So many, is this a home restoration company? Like they do a lot, like the stuff, if you want to redo your bathroom, your kitchen, that kind of thing?
No, here, let me give you directly from, it's retail, isn't it? It's
they have a retail shop, right? So, and they have, I believe, furnishings and things like that.
But a lot of it is like, this is like higher end, like not like fancy schmancy, but like it fits the worst case scenario for me. Like there's whatever the Fed does to stimulate the economy, whatever the federal government does, it's a survive mode. It's not a thrive mode. So companies that are non-essential products, those really require consumer spending to be on a level that can help sustain them. Because the Fed can't directly intervene here. They can't make you go buy a couch. They can't make you buy dining and bed and bath and rugs and windows and all of these things. They can't help you do that. And so that requires true, genuine consumer spending to occur. And these are the type of companies that, bottom line, it is really about how you feel about the coronavirus. Do you think this is some short-term thing and everything's going to V-shape and get back to normal, well, then you're much more interested at discounted levels. It's the worst type of company for me because my personal view on the coronavirus is that this is something serious. We're going to screw up the launching. We're going to get back to work. We're going to have second waves. We're going to have additional lockdowns later on. It's going to be a total mess. And you're going to have like unemployment levels, and consumer spending is going to be jittery. And so it is like the worst type of company for me to engage in, because not direct consumer spending and non-essential consumer spending. And I just don't see we get back to there. So
high-end home furnishing stuff that obviously people would like when they have a great job and the economy's great and the market's at an all-time high. But I'm looking at their website right now, Mark. $5,000 tables, $3,000 couches, stuff like that. I mean, nice stuff it looks like, but furnishings and whatnot. So
it's just like
yeah.
at some point, it's at some point in the future, when you have lots more information on consumer spending, anything premature of that is just a blind bet. And
too much uncertainty. We're not ready to settle down with RH for sure. I think so.
I'm not willing to take it out on a date.
Not even a date right now. LLY, if we can hear Heather Owen out there. Heather, great to see your name. I mean, Eli Lilly. I mean, we talked about Abbott Labs just a minute ago. These healthcare, this part of healthcare, Mark, has been screaming. I'd take these guys on a date for sure. I love Eli Lilly. That breakout the other day was just completely.
I would too, and I would just point out that this is what Mark and I talked about. Was it yesterday or 2 days ago? This is a nice break. I'd like to see a breakout pullback.
Now, would I wait for earnings? Of course I would.
We got earnings, get a breakout pullback. If we get a gap down on earnings, then that could be a gap fill with that. There's I'm with you. Long term, this is a good company to take out on a date, but not today. Maybe 2 weeks from now.
Like if you had a big, and this is what we were talking about Johnson & Johnson the other day, especially, and this is from a trading point of view, because I have a lot of interest in trading these kind of companies to the upside. You get this broad market sell-off, right? It takes everything down with it a little bit. But these are the type of companies that will recover faster. These are the type of companies that swing trades are possible. So, I mean, this is where, like, for the swing traders, healthcare, certain segments there are going to be a lot more bullish candidates. And when you have market sell-offs, I don't know how I feel about a long-term relationship, but I'll definitely want to hook up with Eli Lilly on a bullish trade if I get the setup. So
Mark's looking for the old booty
action tonight.
All right, Dick's Sporting Goods, DKS here. No for me. Let me just be clear. Retail, they have so many locations that are going to be dependent on foot traffic. I know that they have some sales online. They've done actually a pretty okay job of that. But for me, any kind of a can be dependent on you. I think it's the same COVID times. It's a bad looking trend. It looks like the whole market kind of make a little recovery there. There's a moving average pocket. Would it be surprising at all that Dick's runs to 30? Not at all. It wouldn't surprise me. Mark, am I missing anything on Dick's here?
No, it's like retail plays. Listen, Neiman Marcus just declared bankruptcy. JCPenney just declared bankruptcy. The retail trends were horrible before the coronavirus. Why Dick's doesn't have those higher end things. It comes down to raw volume of consumer behavior. So even if you open up, here's the thing about the thing is like, well, the coronavirus is stupid. We're just going to get back. People are going to have less money and they're going to be more conscientious of the money they have. And so a bet on Dick's is a bet on sustainability and at some level, a bet on profitability. And I'm just not willing to make that unless I get really cheap prices, then I start becoming interested. That's where the moderate bull in me, because my belief is that one day we will transform society one way or another, beating the coronavirus, getting to a new norm. But I got to take those bets at cheap prices. I'm just not willing, so, the same cheap coffee date with Dick's.
And we won't be able to do them all, but I'm going to skip through and kind of grab the ones that grab my attention. Mark, I have to get you on this one, GDX, because gold miners are different than gold itself. you know. So I know gold miners, obviously they own some of the precious metal. There's some of that there, but they also have operational costs. They have all kinds of different things as well. What's your read on GDX right now?
I want to match with GDX on my dating app and have lots of conversations, but like, and so like I definitely want to have a conversation with GDX. I
I don't know
just
the apps. Is that a swipe right, swipe left? How does that
Well,
work?
you've matched. You've both swiped right. You're both interested in each other. You're talking. You're saying little flirtatious messages. But the whole mind closure thing, right? I think that is a real rolling situation that could cause miners to lag a little bit. I mean, we've seen this in meat processing plants. We've seen this in a number of different industries where employees get hit with the coronavirus. You have to close down for a short period of time, and there's going to be these pockets of roll. So, do I like gold miners? Sure, absolutely, want to talk, but I just think gold itself is a better one-to-one play it because I think miners could lag a little bit when those headlines, which inevitably will hit, causing those to have a little sell-off while simultaneously decreasing the supply of gold. And so I just think gold itself is a better play than miners right now because of those rolling problems that will occur. They're just going to occur. You're going to see those headlines at some point this year. A mine closes because coronavirus going to cause a negative, and that's actually a bullish headline for gold itself. So
Yeah.
I'm married to gold until the Fed stops hitting the green button on the printing machine.
Mm-hmm.
But gold miners, I just need to just talk with you.
Yeah.
Don't.
I'm with you 100%. I love the analysis. We just love gold miners, though. It's hard to be cautious here, but gold is just the better, safer play out of the two, in my personal opinion. We'll keep coming back to gold miners over time, though. GDXJ, by the way, looking like it might break out. So talk about technicals. I mean, that might be if you're looking for a technical signal, that might be something that you'd be for. Let me hand pick a couple here. If I miss one of yours, guys, apologize, but I got to make some cuts, hard choices here. Twillo from Scott Curate. Scott, a long-term member of our community. Great to see you, Scott. TWLO. This is one of those market darlings from years ago, Mark, that fell out of favor for a bit. Looked like it was making a comeback, and then the crash in March absolutely devastated it. You've got some momentum here that's starting to make a comeback. Any perspective on Twillo?
Not a lot. It's not a company I know as well as others. You look at the relative strength compared to the market. I mean, Twillo's always been a reasonable trading stock, right?
Mm-hmm.
Like when you had that breakout at the start of the year, and then you broke out and had this huge moving average pocket to the upside. When you just had the moving average pocket fill just recently, Twillo's a great trading stock. I don't know enough about the fundamentals of the company to give therapeutic advice for the long term, but like if you're looking for a fun stock to trade that can move, Twillo's not a bad one. You can have really, really massive movements. And so Twillo, oftentimes you can put yourself in a position to have these really great reward risk ratios on trading, where you can manageable risk and lots of upside or downside, depending on which direction you're going. So great trading stock, absolutely fabulous trading stock. Just don't know enough about the fundamentals to give an intelligent answer to the question.
I love it, though. Let's go through a couple of them here. AMAT, Applied Materials. Obviously, we talked semiconductors a little bit earlier. Mark, AMAT is an interesting one because they've been so fundamentally sound, one of the best performers in a long time. But you've got that uncertainty in semis in general. Taiwan came out today with a favorable report. What's your read on AMAT here?
Well, I mean, my read on AMAT is my read on the semiconductors as whole. I think we're going to get this rolling start to the economy. I think things are going to be sluggish, to say the least, for the coming 9 months in one form or another. We're just not magically going to V-shape. That's a fantasy. And semiconductors at lower levels can be attractive in this environment. The higher it goes, the less likely I'm interested. But AMAT is one of those things that you get a broad market sell-off and you're looking for that cheap holding, selling naked put style. I mean, I think there can be some real things in semiconductors. So the lower it goes, the more interested I am in AMAT. The same would apply to almost any other semiconductor that doesn't make gaming chips or something that can benefit in this environment, no matter what the economic situation is with the coronavirus. So give me something at a lower level, give me a sell-off, put it on a watch list, not ready to go out on a date with it yet.
I'll take a couple of the next ones here. Let's start with Activision if we can. Guys, you know, right now, online dating, video games might actually be the best relationship you have, better than so many others, you know, especially when you're shut at home. Activision's been a leader. It's been so strong, been a juggernaut. They just released a bunch of new titles, came out with some Call of Duty title and whatnot. Their World of Warcraft game has got great subscription numbers across the board. It's a great play. You know, if you've been in a long-term relationship, I don't see any reason to get out of it. If you're looking for the timing on when to ask or pop the question, you know, hey, will you go out on a date? You might need a little pullback there. I don't know if today would be the entry point on a new relationship, Mark, but that's just all timing stuff. Great fundamental company, don't you think?
No, I've been on the last 2 weekends on with our pro members, you know, given the thumb up on my end on Activision. Streaming numbers, data we have on video games, position. It's just one of those things. It's all a matter of how you want to play it, right? I always like discounts, all of that. So moving forward, Activision becomes a reasonable trading stock. I mean, just look at this recent breakout. Can be a reasonable trading stock to the upside. Absolutely put it on your watch list. You know, I'm just always a naked put guy. Once again, if we have a broad market sell-off, lower levels, this is really high on my radar for those safe, conservative cash flow plays. The only problem is if you elevate too high, they become less safe as a cash flow play. That's the only hesitation, but there's lots of upside potential in the short term.
You know, we're at the back end of our show. A couple more stocks we're going to go through real quick. If you're watching our show for the first time, welcome out to our community. It's great. We've seen our numbers go up online here recently, Mark. In fact, we got over 200 people here live. If you are a member of our community, always it's great to have you guys. Hashtag Team Tackle in the chat. It's great to see that hashtag coming through. Give me a quick thumbs up. You know, come back and join us each and every day. We do this live at 12:30 p.m. Eastern Standard Time. Every day the markets are open, and make sure you click the subscribe and the bell. And by the way, we've got a 15-day trial of our pro membership, which is our premium product over there at Tackle Trading. Down in the links below, you can always sign up in the comments. Now, a couple more here, Mark. Caterpillar, CAT, tough one. Well, I don't think it's a tough one. Actually, I think the analysis here is probably a lot simpler than the other ones, because this is absolutely not a relationship that I would want to go into personally. I mean, I don't know. High-end industrial equipment in a world that requires global production for Caterpillar to do great. It's not just about the U.S. You have a strong U.S. dollar, so a U.S. company having to ship those products overseas. Again, now they're going to have to pay premium in the face of a global recession. Mark, complete stay away from me, if not even bearish, right?
Listen, Caterpillar has an STD and the coronavirus and will kill you immediately. Like the price run up on Caterpillar, I don't know if I said it on this show or if it was in an internal meeting, was a symbol of how stupid short-term price action is in making long-term decisions. I mean, Caterpillar was at levels just last September, October. Caterpillar cannot do well in a global deep recession. Too much foreign sales. So whatever the Fed does short term in the United States, the massive lack and decline in revenues and profits worldwide, no, absolutely not. And so whenever Caterpillar spikes, like it can create some really nice to the downside trading opportunity. Adding it to my long-term portfolio, no, I would rather join a monastery, swear double celibacy, than put one share of Caterpillar in my long-term holding.
It's just not the market conditions for me to own a company like this. It's so dependent on global trade and all that kind of stuff, as well as production. I mean, you're going to have new investment in the markets. And think about the projects that companies who need equipment like Caterpillar are going to start. We already talked about the financial problems, the lending problems. What are banks going to do? Mark, this is just an absolute stay away. There's no question. Great analysis, by the way. Last one. Let me pick here. You want Peloton or Lulu, Mark? I'll give you a choice.
Give them both to me.
Let's do them both. Lululemon first.
You know, once again, like Lulu, great company, great trend, seem to have everything rocking. I have a real hard time with $100 yoga plants when you have the economic consumer spending conditions moving forward. Now, am I more interested in a Lulu than a Restoration Hardware? Yes, because as a general rule, Lulu has a really rabid fan base. You know, where they might say my yoga pants and looking good and all that as yoga starts back up, I need to look good. And so, I mean, they have a rabid consumer base that is loyal to them. But man, I mean, it's just not the type of company that I'm just terribly excited about, because this economic condition is going to exist for a long time. And so retail stores in general, just overall consumer spending, I have a hard time seeing Lulu, the upside, right? I have a hard time seeing the upside of Lulu equating to my downside risk. So I gotta get a cheaper price.
It's tough for me though. Go back to a long-term chart. Maybe like a weekly chart on this one, because I love this company. Yeah. I'm with you on the short-term analysis. I'm with you on all that kind of stuff. But man, what if you've got what if you're looking for a relationship with a company like this, with the high, nice reward for like long-term, settle down, 10 years?
Yeah. Okay. Yeah. Call me old-fashioned, but I'm in the middle of a consumer mess that we're in a changing world. You want me to pay the same price I was paying last October for the stock? Like, that's insanity to me.
Wait for a better price.
Great company. If you have to, I mean, you just gotta see. You just gotta be patient. Otherwise, you're just gambling.
Yep.
You're just gambling.
And last one, if I missed one, I apologize out there. I couldn't get to all of them. Peloton, very interesting company. One of these kind of sexy coronavirus type stocks, Mark. During the quarantine, people are home, still got to work out, getting those Peloton bikes. Now, here's the problem. The theme is great. The idea of working from home and all those kind of things. Peloton's an expensive product, so it's got some complexity here. Interested to hear your thoughts.
No, and that's an excellent point. Now, people that work out, like, I mean, I don't go to my gym. I actually canceled my membership in early February when I saw the coronavirus coming down the pipeline. And my lady's like, "Why are you canceling your gym membership?" And in my head, I'm like, if I told you, it would ruin your day. I'm going to let you stay in your little bubble until it all breaks. But I want to work out, right? I want to work out. And multiply that by millions and millions of people. Now, can you afford it? Are you going to go to cheaper things? It's one of those. This is like one of those tough virus plays, because at lower prices, right? You can get excited. Unlike Zoom, who I see transforming the way business works and their long-term subscriber base growing, do you see a short demand shock for Peloton, and then as society backs up on some level, that wanes? I mean, tough stock. And so it's because it's tough to see. You can see short-term burst in sales. I have no doubt that Peloton sales, when they come up with their next earnings, are going to be like, yeah, is that sustainable? That's a hard question to answer. Mm-hmm. Or is there going to be a short burst like the Campbell soup that you have on your shelf? I'm going to go buy a bunch of Campbell soup, but then I don't need to buy any for a while. And mm-hmm. You could see a short burst, but I don't think that's anywhere reflective of a broader trend, unless you're like, coronavirus here forever, never going away, never going to give you up. Then you can cease to say, but it's the sustainability of sales that I have a harder time seeing with Peloton. Short-term burst, absolutely. Sustainability, higher price time, that's a harder sell. So you had a deep pullback for whatever reason, maybe. But come on, this stock is up 100% in the last 3 weeks, mm-hmm. last month. Mm-hmm. I'm just not going to chase the dragon on a long-term investment. But you look at the trading opportunities, look at that breakout that occurred 4 sessions ago on Monday. Great trading potential candidate. Great, because the fundamentals, long-term sustainability, none of that matters to mm-hmm. a trader. So put it on your trading watch list. I'm just cautious myself because I don't think those sales are sustainable at the, you just don't chase the dragon is usually a pretty good advice on long-term investing.
Very interesting. David J, appreciate that. This, by the way, I did not know this. He says Peloton offers yoga memberships now. You don't necessarily need a bike. So, I mean, that does let me know they are trying to diversify what they do. How do you watch it? Do you stream it to your, HDTV or something like that? I mean,
have you met anybody that's ever done yoga? They love the social aspect of it. If live yoga classes start up again, that's why they go to yoga.
They're going to be back.
Yeah. And so that's, I mean, once again, that's a cute, nice, maybe short-term. There's just so much short-term potential bumps that might have a real hard time generating any sustainable numbers over the long term.
I think it should be on everybody's watch list, at least for
trading
opportunities and whatnot.
For trading opportunities, 100%.
Yeah, 100%.
I mean, look at that. That trade on Monday you could have placed, low risk trade. You raise some, put in that stop loss somewhere in the range or the bottom of the range. You've already hit your target. So like this is an excellent bullish watch list candidate for traders.
I love it. Guys, that is our show. We're going to wrap it up here. Mark, pitch our 15-day trial if you can.
Listen, we do this kind of stuff. We love the markets. Are we perfect human beings? Of course not. But we are 100% committed to both providing quality analysis, quality discussion. I learned as much from the collective community as I hope I impart. We have a wonderful community at Tackle Trading. Come try it out. Maybe it's for you. Maybe it's not. Maybe you like our community. Maybe you're just freaking bored right now and need something to do, right? Come join on, get on a trial, go to store page at Tackle Trading. We have a ton of content. The decisions you make over the next 9 months from a long-term investing could be some of the biggest decisions you make for the rest of your life in trading. I really believe that. Position yourself well. Information, conversation, knowledge helps you do that. Come give us a try at Tackle Trading, and you can always email me, team@Tackle Trading. I'll get you set up.
And I just want to give a big shout out to a guy that a lot of people may not know, Michael Che. Do you know him? Michael Che's on SNL. He's one of the funniest guys you'll ever see. He's a new young comedian. There's no question. His grandmother died of COVID-19 over the weekend, and I think she was living in one of the boroughs in New York City. And Michael Che ponied up and paid all 160 residents of her apartment building's rent for the month. And, trying to get some awareness out there for coronavirus. Tough times, tough stories.
We'll go to Square because, I mean, old Dorsey donated $1 billion freaking dollars.
Jack Dorsey did?
Of his personal wealth to fighting the coronavirus.
Oh, there's a bunch of celebrities that are coming out now. I can give respect to them that are raising money for food and rent and things, not necessarily like coronavirus research, but everyone. I mean, I know people that haven't received a check in a month, and they're still waiting on their stimulus check because they haven't been paid. They haven't been working for a month. That gets hard. So there are a lot of celebrities out there. The ones that come to my mind, I know Justin Bieber, A-Rod, Kevin Hart, Matthew McConaughey. They're all raising millions of dollars and donating them. And then what they're doing is they're giving away like something that they can give. Like A-Rod's giving away like a batting lesson with him. You have Matthew McConaughey is going to take you to a TU football game.
Just be sure to Lysol wipe down that bat when he hands it to you.
Hey, batting practice to A-Rod, that's pretty cool.
No, but like, and we've been trying to do our best to give a little extra, more programming, more time. People not only need information, but man, you need something to do. A lot of individuals right now, right?
Yeah.
You need to be with people. Like you're going to see a lot of examples in society of people doing wonderful things. Now you're going to see some of the dark, right? It's going to bring out the best and the worst of us. Just where do you want to fit on that human spectrum? Do you want to be part of the best of us, or do you want to be a part of the worst of us? Where do you want to fit? And I think that's important.
Step up and do great things. I'm with you. And I do believe that at this point in your life, in our society, not only is it time for us to re-examine who we are as humans, I mean, it's time to get financial literacy. Here at Tackle Trading, our mission is to help educate people in trading and investing, Mark. And I think it's a critical time. I mean, it's the way that we can give back. I love hearing stories like Jack Dorsey giving some money back to for research and whatnot. That's a wonderful, beautiful story. Focus on some positivity in certain ways, guys. That doesn't mean you have to ignore the facts, but focus on what you can find, what you can do out there to move yourself forward, your life forward. A really great show today. I enjoyed it so much. Cody and Mark, great job, guys. Everybody else, we will see you tomorrow for Friday Fun Day. There's another alliteration, Mark. We're alliteration heavy here at Tackle Trading.
Maybe I do want to keep smoking so I don't have to deal with that anymore.
We'll see you tomorrow, guys. We're out.